What's up, investors? Welcome back to the Investors Club. Today we are going to talk about something other than dividend stocks. We're going to talk about why I'm not buying into Tesla stock just yet. Now, I know this channel is all about dividend growth investing, but it's good to note that even as a dividend growth investor, you should keep your eyes on some growth stocks that you see potential in. Just because you normally buy dividend growth companies does not mean you can't go after a few good growth companies as well. It's been one crazy year with Tesla as they started the year with a stock price of around 100. They saw steady increases up until the pandemic, where they dropped all the way down to double-digit price range. I hated myself after seeing that Tesla dropped to a 52-week low of 44.86. Now I would like to point out that all this data is taking into account for the 5-to-1 stock split, so these lows would have actually been around $225 at the time. Oh, how I wish I would have bought that nice pandemic dip. But that was right at the beginning of my investing journey, and I had no idea what I was doing. As the stock price began to recover, Tesla started to gain so much momentum. I remember looking at Tesla before the stock split when it hit 800, thinking it was overpriced. Then again when it hit 1500, and again at 2000. All the while thinking there's no way the stock could go higher. I was sadly mistaken. The stock flew up after the announcement of the stock split, as well as talk about being added to the S&P 500. Although they still haven't been added to the S&P after reaching their requirements, the stock price has stayed steady since the stock split. Minus a few big drops, but they have always rebounded quickly. Tesla is a really eye-catching stock. With a genius CEO, a group of investors who have no regrets of investing at these high prices, and a business model that seems to be the future of transportation, it's easy to dive into this stock without doing some research. Let's take a look at Tesla as on Seeking Alpha. The first reason why I am not buying Tesla yet is because of their meager profit margin. I understand that much of their profit has been put back into the company, but I'm still not completely sold on the profit margin. I believe in the future Tesla will have no problem securing larger profits and stay atop their competitors. The next reason why I have not bought into Tesla yet is because of the price. Because of the price compared to earnings per share. Right now the EPS is only around 47 cents per share, and I just can't bring myself to buy a stock this high with such a low EPS. Lastly, as you can see, this stock has surged 790% in the last year. While it has done some correcting from its highest points, I really think that this stock has a lot more correcting to do. I do believe this stock will be one of the largest companies in the world in the future, but at the price right now, I just see a big chance that it could turn around and correct itself. There's a high probability that if the stock starts to fall, a lot of weaker investors will not hold their bags, and they will start to sell off this stock. And when a sell-off happens, it can hit hard if you get into a stock at the wrong time. I just see this stock having a lot more correcting to do before its price reflects its data, so I'm going to stay out of it for now. Okay guys, that's all my reasoning why I'm not saying don't buy Tesla. I'm just saying that you need to do your own research before jumping in this stock, or any stock for that matter. This is not financial advice, it's just my own personal opinion on Tesla right now. I just don't believe that its stock price reflects its data in the best way to justify me buying it. I really like this company. I like what they're doing, I like the concept, and I truly think they're the future in transportation. However, with their profit margin and all the government subsidies they've been given, I just think their stock has some correcting to do before I jump in. So, now that we're done talking about Tesla, let's take a look at my portfolio quick. Today was a decent day. We were up almost 1% pre-market, but had a pretty big sell-off pre-market. But by after hours, we recovered decently. All in all, an $80 up day, so it's better than being in the red. The stocks that hurt me the worst were, looks like Carnival, like usual, and 3M was down almost 1% too. But I had some nice gainers as well. Okay, guys, well, that's the end of the video. Be sure to like and subscribe if you found anything good from this content, and we'll see you in the next one.